This is not financial advice, but buckle up, my friends, because we are going to talk about today the stock market crash of 2021. I'm going to talk about what you could and should do to prepare for any stock market crash, not just in 2021, but beyond. I've even received just recently some comments here on the channel that have made me just think and say, stop, hold up. We need to talk. If we could have probably agree on one thing, it's that the stock market pros are very similar to a meteorologist for the weather. They tend to be right about 2% of the time and wrong like 98% of the time. I don't know about you, but that's how I've been feeling lately. In fact, funny enough, in a random stroke of good luck, they even threw darts at a wall, and based on where the darts landed, they would buy into the stock. Well, that outperformed the stock market average by 27 percentage points in April 2019. So if darts being thrown at a wall does not shock you about stock market projections, I really don't know what will. And that leads us to now. What should we do to prepare for a stock market crash? The tips I'm going to share with you today have helped me weather a few storms, the 2008 crash, the 2020 crash, and a few others, and that has helped me lead myself to a $600 improvement in my Stash app, as well as earning over a couple $1,000s in my Schwab account. And I want to share with you what you need to know so that way you can weather the storm should the stock market crash, and how you can come out looking like a superstar. But don't be greedy. Make sure you tap that like button down below. That helps YouTube get this video out to more people so we can give them tips so they can also avoid a stock market crash in 2021. Definitely appreciate it. Let's get right to it. In what was the largest crash since Black Tuesday of 1987, the Dow, NASDAQ, and S&P 500 took a sharp nosedive in March 2020 from 29,423.31 on February 13th to 18,591 on March 23rd, 2020. Shutdowns and fear really drove down this cost. And right here is where people started selling out of their shares because of that fear. And some people even sold and actually took a massive loss as a result of selling at the time of the crash. But check this out for just a second. If we would have held on through that storm that happened in March and April of 2020, today, the market now rebounded and even came back stronger on January 13th, 2021, showing us 31,060.47 on the Dow Jones. So what was a dip in March and April of 2020 has now not only rebounded back to February 2020, but has even beat it. The thing I have learned is just being consistent and staying focused. And let's not forget what Warren Buffett has said. And honestly, if I'm going to take advice from anybody, it's going to be Warren Buffett, because the guy is worth billions of dollars. And he says, be fearful when people are greedy. Be greedy when people are fearful. This means when the market dips, we buy in. Now, I know a lot of people, especially back in 2020, they had a lot of issues because some people did get laid off, they lost their job, very sad things, and I feel very bad about that. Those people that did not lose their job, though, this would have been a perfect buying opportunity. And I'll tell you a quick story. Back in 2008, when we had the last financial meltdown, when Lehman Brothers and a few other the financial systems crashed, the housing market was on a dip, everything was going completely out of control. In fact, they called that period of time the Great Recession. I didn't have a lot of money at the time, and I really wanted to get in. I saw things like Disney stock, Six Flags, and what was it at the time? Ford really dropped in price significantly during this period of time. And I thought, you know, I would think something like Disney is going to bounce back. I would think something like Six Flags would bounce back. I bought like one share of Disney, and I bought like one share of Ford. Today, they're up so much money compared to what it was back in 2008. Now, I only had enough money to buy one share. If I would have bought a significant amount, I would have been in such a great position here today. And that was a period of time, just like back in March 2020, where people were absolutely scared. They weren't sure. There's a lot of uncertainty. So people pull away from the market thinking, no, this is the time to sell and get out and run away. But I think that's actually the opposite effect of what you want to do if you want to be successful in the stock market. I think a lot of us need to get out, and myself included. Sometimes we get into this instant gratification mindset. And just recently with the GameStop short squeeze that went on, a lot of people were getting into that because they saw an opportunity to get rich quick. And guess what happened? And people bought in at that $200 or $300 plus price. And then within a week, it was back down to 90 or below. And some people lost a significant amount of money. I even did a video on a YouTuber who lost $85,000 by timing the market incorrectly with GameStop. So if we can get out of that timing the market and instant gratification mindset and start focusing on a consistent method, a consistent strategy, we will actually find ourselves in a much better position than we would have even if the stock market crashes. I have 3 major rules that I follow in a stock market crash. The first rule is only put money in that you can afford to lose. And that's a pretty basic concept. If you only have $100 to put in, and you need that $100 to afford next month's rent, or you need it for food to feed your family, don't put that money into the stock market. Don't put that money into a get-rich-quick stock. Number 2 is to invest in things that you understand. There are a lot of things that, somebody could post up a video here on YouTube and say, hey, this one's about to 10x. You got to get in. This is a hot stock. And you learn it's about dirt moving in Southern California. You don't know anything about dirt moving or why they would be moving dirt. You don't even live in California. So why would you invest in that stock? Now, let's say you're interested in something like cruise lines. I really love going on cruises. Your boy's gonna be going on a lot of cruises. So I trust and believe, even with the shutdown of the cruise lines, that they have a lot of opportunity. But most importantly, I can understand what's going on because I'm so passionate about them. That's something that I would be interested in. So I'm not gonna go in and invest in that dirt mining company in California. I have no clue. And if they make a wrong move and there's some type of weird news story that comes up and I miss it, I could totally lose all my money, because if I bought in at a share price of $100 and something weird happened with that industry and it dropped down to $2 a share, yikes, that kind of stinks. Whereas in the cruise line, I can understand, okay, here's what's going on. I'm comfortable, I'm cool, I'm gonna buy more in, or I'm gonna just hold my shares, whatever that would be, because I understand what's going on with that particular industry. The third rule I have is do not freak out and sell. Let me give you a great example. Let's say you buy a stock of XYZ company. Now you own that share of stock. That one share of XYZ is yours. Now sure, it could drop to $2 a share, or it could go up to $100 per share. But no matter what the price is, it's your share of stock. Some people have messaged me here on YouTube, especially in the comments, and they're thinking, hey, if the price goes down, I'm gonna own less, and my everything's going down, I don't own that anymore. And that's not really the case. You still own your one share, and sure, your portfolio value may go down in price, but no matter how much or how little it's worth, you own the share, it's all yours. So think more for the long term. Don't freak out and sell just because you see the price going down. That is the complete opposite, and it just drives me up a wall to see people do that, because then I think people start not trusting what's going on in investing. They get nervous about the stock market. They feel it's too overwhelming, they back away, and they miss out on great opportunities. Now let me give you some arguments. When it comes down to a stock market crash, you can never truly understand, and that's why I meant earlier when it comes down to throwing darts at the wall. You don't really understand if the stock market's going to go up, down, sideways, inside down, upside down, do circles, or play dead dog. You just never know. The best thing to do is just to continue on investing. And yes, it's very boring. It's a very boring strategy to say, I got rich by just putting in money every week into the stock market. And I don't care if it's up or down. I don't really care. I don't even really spend time looking at what really is going on. I focus more on the news of the company and see what's going on that way, just to see if they're innovating or maybe they're about to call bankruptcy. In that case, I'm going to get out. But if it's just a matter of the same old, I'm going to continue to invest. And if something epic happens, the stock market dips down, just like it did in March 2020, cool. That means as I buy in and I continue my consistency, my $5 is going to buy more than it did a month earlier. Pretty cool. And then the next month, as it goes back up, my $5 might buy a little bit less, but I'm continuing to put it in. It's a cycle. Around and around it goes. And if you do that over a course of a period of time, you will see significant payoff, my friend. I just did a video and I was responding specifically to GameStop. I'll link it up above in the info card, but what I do is I talk about near the end of the video, I talk about how if you would just invest consistently, especially if you're younger, and you take advantage of the typical stock market growth of 10% on average, you could stand to make a couple millions of dollars. And in some cases, in one of the examples, it was $6 million just by simply investing money every month. So find your way to make more income, put that income to work, and you could be like retiring on a couple $1 million and you could call yourself a millionaire. So it doesn't matter. If the stock market crashes, oh well. Does it suck? Yes. Do people lose their job? Unfortunately. And that's very sad. But the most important thing is to not freak out and find yourself on the wrong end of the stock market spectrum. If you enjoyed the video, give it a like, make sure you subscribe, and we'll see you next time.